Hello, fellow traders. 'Tis I, TheRumpledOne. It is Wednesday, March the 30th. The year's 2021. Let's talk trading. Trading Better, Part 17. Just like all the rest of the videos, this video is for educational purposes only. Your result may differ from mine. And we're right near the end of the month, so I'm just going to remind you once again for the, I don't know, thousandth time maybe. Always have your risk management in place. Never lose any more in any one particular trade than you're willing to lose on any one particular trade, because you don't want to get blown out of the game. So let's take a quick look through the charts here. On the monthly chart, we're 254 pips below the open, 163 off the low, and 275 off the high. Big red candle. Notice where we are pretty much at the a monthly low from 3 months ago. As far as the week goes, we've definitely been recovering from the weekly low. We're 113 pips off the weekly low, 23 off the open, and 23 off the high. Since the open was the high for the week, who knows, maybe we'll turn this green before the week is out. It'll be interesting. We are in the opening range for the week. You can see right here. We are 362 pips below the yearly open. 165 pips off the yearly low. And we are 586 pips, 87 pips now off the yearly high. We had an inside bar 8 days ago. We are within that range once again. So a long trigger at 31.96 with the low trigger at 31.10. Now a little more inside bar action on the daily. Still a lot on the monthly, not too much on the weekly. And I'm thinking, since we have so much action on the monthly this month, that possibly next month we might see a break on some of these pairs. Something just to be aware of. $88 pip range for the day. We have a bunch of pairs over 100 pips, with the beast, the pound yen, being over 200 at 233 on range. And for those of you who trade the dollar yen, remember this peaked out at 125 earlier this week, and it's now back down to where it was at 121. I hope somebody out there got that trade. Buy zone, pretty much that was the trigger. Heading towards that weekly open. And remember, according to the seasonality, the pound typically forms a bottom in early to late May and then moves higher into the end of April. Well, we definitely formed a bottom. Let's see what happens from here on out. This is almost a repeat of yesterday. Seems like when I made the video yesterday, I believe I said it's red rats. Start looking for a short, and after the video there was a lot of cheese for the red rats. So red rats, you might want to start looking for a short, but as always, be careful. Your results may be different than mine, and have your stop loss in place. We hit today's pivot pivot near R1 called short. It worked the first time, not so much the next 3 times. So once again, what I mentioned yesterday about trading and trading better is you have to realize no matter what method you have, there's going to be times when the market will give you a profit or an opportunity to take profit, and there will be times when there won't be any opportunity to take profit at all. You'll have to eat the loss. And that's just the hardest, I think, out of everything. That is probably just the hardest pill to swallow, because unless you have conditioned yourself to basically not react to whether or not you win or lose on any one particular trade, you're just going to be on an emotional roller coaster. And that's not conducive for good trading. Okay, the pivot from 2 days ago is missed. Pivot from 4 days ago is missed. We're only 60 pips away from that pivot. And I'm thinking we've got 2 days left in the month. And I would imagine if we close above this high, we just might take those out. Not to mention we're so close to the monthly open that I think they're going to probably want to push it right back to the monthly open. They being the big boys. So you can see here, we're just 32 pips away from that weekly pivot. But we're 278 away from the monthly pivot. But if it doesn't get taken out this month, probably next month, you can see we just broke out of the upper wick zone. 1, 2, 3 on the 4th attempt using the hour candles. Of course, if you get down to the minute, there's probably a lot more attempts. But just looking at the hourly, you can see for the past couple of hours, we have tested that 3159 level, which was yesterday's high. You know, this is a perfect method that you can, or a perfect example of a method that pays off sometimes and sometimes it doesn't. I mean, look at this. I mean, you had a high of 3159.9. Well, that's only 6 points, not pips, 6 points. So it was like almost no opportunity. And the next time it happened, you had a high of 61. You could have picked up a pip and a half, maybe. So if you didn't have your stop loss, if you had your stop loss down here, it never got triggered. But you took some heat almost to the halfway point there. But you see what happened. You know, if you have faith in the method based on the statistics, you know it doesn't like to close inside the upper wick zone. Only about 25% of the time will it close by the end of the day in that upper wick zone. Or actually in the either wick zone, because see, it only closed 12% in the upper and only 13 in the lower. So it's going to be outside the wick zone 75% of the time. And see, right now it's cash in time. And looking at the highest low, lowest high, once again, this is one of those methods that sometimes it pays nicely and sometimes it doesn't. For example, here, coming off of a 3 ball, it hit that highest low, gave a few pips, If you didn't take them, it took it back. Gave a few more opportunities for profit here, taking them back. Lesser opportunities here. And one thing I've noticed, and this is just something I haven't run a statistic on it yet, but if the indicator 2, the EMA 5, is above the higher low, when you take that trade, there's a pretty good chance you might get your fingers burned. So that's kind of been one of my filters. I don't like to see the EMA above the higher low unless the price is past the in the frequency distribution. It would have to get past 3 or more for me to start considering to take that trade. And that's something else about trading better is, oh, that's my alarm. About trading better, you have to just be observant when you're sitting in front of the chart, and just to see if you see something like that, and then you can go back and look, and then you can test it. And then maybe you can incorporate that into your trading, and just a little observation like that might make you trade better. It'll filter out some of the trades, slow you down. And as you can see here, price is on a tear right through the Walmart line at 60, through the previous H1 high, which was the daily high, current daily high at the time, 31.67, 10 pips above that. We're into the ATR range now. And from close to high was at 97 ATR, almost 100 yesterday. I think we exceeded that. We've got a 99 pip range. And then the range over the ATR percent is 99. And computer's running kind of slow today. And if you just want to see the ATR rather than the ATR percent, so ATR is 101 out of the last 14 bars. We're at 99. So red rats, once again, get ready. And you can see because of the ATR, reversal trading okay. And looking at the map, there's a pivot point that hasn't been hit here. Notice there was a pivot point that didn't get hit there. There's one up here. And I think I pointed out one of those yesterday to you. We've got a big return bar here that price filled. You can see here on that return bar, price came back to the open. Here, price came back to the open. This return bar was an inside bar on H4. So, fellow traders, if you want to trade better, just look at the chart and see if you see something you can use in your trading, and then study it, test it, and then if it works, do it, because it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.